Good morning, traders. It is Wednesday, October 2nd. Taking a look at the charts, we got the SP 500, the SPY ETF continuing to pull back. Yesterday, it broke down, closed below a critical stop level, and it's picking up speed in pre-market trading. More or less, if the equities continues to unwind, we could see a pretty sharp fall, very similar to this type of price action right here, where the market starts to break down. It could see an extended run, something it's very similar to this type of setup as well, and like this. So this is where we're at, where the market has broken down, and we could see some type of sharp pullback going forward. And if we look at the price action, yeah, you know what, we'll throw a Fibonacci extension on here to get an idea of the move. If we grab the recent high and go down to this recent low, and back up to this high from the previous session, carry it forward. You can see the first short-term target down here at the 289. So another percent or two to the downside, and that'll be right through the heart, the middle of this consolidation. It's through this little bull flag, and it's right at this pivot high and a pivot high and a breakdown area. So it'll be a pretty significant support zone, but if you look at the big picture, it looks like it could still fall further than that. That's the first target, but really this feel here in the market feels as though it could kind of have some type of washout low, just like these here. We get these huge type of washout lows where the price just really continues to slide beyond these levels, and we could see something like that where it comes down and we see some type of big washout low and potential recovery, and then see where it goes from there, whether it comes back up and slowly builds a kind of a longer kind of wedge here, where if we break that trend line looking forward several months, it could be the start of a full out bear market. But overall, one thing at a time, stocks starting to break down, and money we're going to see start rolling into the safe havens. Bonds have been kind of holding up here. Today they're trading slightly higher, relatively flat, but we want to get into a safe haven play. Bonds should continue to have some strength. This can be seen as the halfway mark for a potential move where the market's rallied up. It has consolidated, and the second half of that move would bring us somewhere up to these previous pivot highs in the market. So we're looking for that flight to safe haven, and we'll see how the markets shake up over the next little bit. Let's take a look over at the miners. Miners are trading higher this morning. You can see today's green bar. They had a strong bounce there yesterday, really strong bounce. They end up giving back half of the gains, but overall, some big money was piling into the safe havens and the miners, and we see them continuing to try and push up to yesterday's highs. Now, if we take a look over at gold, we're using GLD. Gold is up again today, trying to put in had this nice three-wave correction. It's a break of this pivot low right across here that gives us that three-wave, that flush out low and cleanse of the market. The trend is still down for miners and metals and silver, but it looks like it's had this complex correction, and now we're looking for it to start to build a base for the momentum to slowly shift, and we could start to see a run higher. And again, if we look at this overall pattern, the market has been consolidating here, and it could very easily start to build a base and potentially start to break out for us to get into a new trend. But at this point, it still is channeling down. The trend is still down based on momentum. We're under all the key moving averages, the 20-day, the 50-day, flirting with the 5-day here in pre-market. So there's still resistance up here at the upper end of this channel, that there still could be a lot of work to be done before the miners, the precious metal sector, does fully reverse direction and have upward momentum. Looking over at energies real quick, here is UNG. Now I'm using ETFs this morning because the ICE exchange, for some reason, I cut off my futures data, and I'm just waiting for that to hopefully be resolved today, and it'll be back to regular futures pricing. But overall, here's natural gas. We played this big run up, had this complex correction, really flushed all the way down with, I think, weather overextending this to the downside. You can see this really critical blue line, very strong pivot zone in the market. Looks like it's trying to find some stability here. We've got two candles flirting with this area. We'll be looking to potentially get in for a bounce here. We could see a knee-jerk reaction bounce, potentially something much larger going forward. Looking at USO, which mimics the price of crude oil, it is all over the place with all the moving averages just squiggling around, price making new highs, new lows, a new high. It's coming back down to make a new low from this low. It is really all over the place, not looking to trade crude going forward at this point yet. Anyways, that's about it for this morning. Looking over at TLT, we are looking to get in at the open of a position, or you can get in at pre-market. It does trade in pre-market, so you can trade anytime in the morning as well if you've got a brokerage account that lets you trade pre-market. But overall, we're looking for bonds to continue to move up as money starts to become fearful and starts to move into these safe haven plays. Anyways, that's it for now. Talk to you in a bit. Bye-bye.